So good afternoon, Ardenites.
Afternoon.
It is really my pleasure to talk to you, affiliates of an institution that is very near and dear to me, Ardenne, of course, on a subject that is also near and dear to me, investment. So when Jermaine reached out to me about the plans for the webinar, I said to myself, and I also shared with him, that there are a number of Ardenne past students who hold very prominent positions in the financial industry. So certainly at NCB, the head of investments at NCB Capital Markets, the head of research, the investment manager at NCB Insurance, well, what was formerly NCB Insurance, and myself, we're all past students of Ardenne. And so the institution can definitely take credit for shaping the minds of the persons who are really driving the industry and the contribution to the overall development of the capital markets. So let's get to the business at hand. Our theme is investment opportunities during COVID and beyond. And I like the positive spin on the pandemic, because someone once said, you know, we should never waste a good crisis. And this is an opportunity for us to really look at the challenges and see how we can make use or make preparations to come out better from this crisis. So I'm going to lay some groundwork on investments. I'll give you an idea of the different types of investments. You see if, right. So this is my outline. I'll talk about, you know, how you go about choosing the right investment products. We'll talk a little bit about the risks that are involved, and then I'll give you my perspective, given what is happening with COVID. So let's start with some basic definitions. What is an investment? No, an investment is the participation or the purchasing of an asset or any item with the intention of generating either income or an appreciation in the value in the future. So persons invest for a reason. You don't really invest for safekeeping. You invest in order to either generate a profit or to supplement your income. Now, this may involve the purchase of several what we call investment assets, the most common being bonds, stocks, unit trusts or mutual funds, real estate, properties, or even a business. Let me give you some basic definitions, and I'm not going to bore you with the definitions, but I'm not taking anything for granted, because the truth is that although we're all Ardenites and we're all bright, not everyone is versed in every subject area. So I'm going to assume that everyone is at the basic level. So if this part bores you, we'll get to the more interesting part in just a minute. So let's look at what a stock is. And this is one of the more common type of investment assets. Stocks represent investment in or ownership in a company. So there are two primary classifications of stocks. You can either have ordinary shares, right, which basically puts you at the what we term the bottom of the capital structure. However, you stand to benefit from the biggest return or the biggest upside. So you are owner of the company, right? So if you buy 1,000 shares in say an NCB, you probably have 0.00001% of the company. But the bright side is you can vote at AGMs, you can harass the managers at these AGMs about what is happening. So you have a say, right? And there are also preferred shares, which behave more like debt instruments. So that is stocks in a nutshell, ownership in a company. Bonds are debt instruments. So from time to time, governments may want to borrow, governments or corporates may want to borrow money from individuals like me and you, and they issue what is called a bond. So it's just an instrument that will pay interest periodically, and then at the end of a particular period, it will give you back your money or repay your principal. Real estate, of course, is land or anything that is permanently fixed to that said land. So commercial buildings, residential buildings, And then you have real estate investment trusts or REITs. And these are basically companies that are set up to focus on real estate investments. And the last thing I'll go through in terms of definition is unit trusts and mutual funds. Now, unit trusts and mutual funds, they are sometimes used interchangeably. However, there is a slight difference in how they are structured. So they both refer to pooled investments. So basically, you will buy a share of a pool of assets that is managed by an investment manager. And those assets are managed for the benefit of all the investors or all the unit holders in the product. Mutual funds are really companies that are set up and you buy shares in mutual funds. And then unit trusts now are governed by a trust deed. So somebody else holds the assets and all the relevant regulatory or the do's and don'ts as it relates to what the investment manager can or cannot do, they are governed by that trust deed. All right, so let's look at traditional versus alternative investments. I think I left out something, sorry. So let's look at what is the difference between savings and investment. So with savings, you're basically setting aside money that you don't really need for now, but you will probably need it in the future, right? So you set aside money. The goal is not really to generate significant returns, and it's primarily for safekeeping. But when you invest, you're really buying an asset with the expectation that that asset value will grow over time. So we can move on now to traditional versus alternative investments. And traditional investments are those that you usually hear about. So you know about stocks, bonds, cash. Those are portfolio staples. So if you have an investment portfolio, usually you will have these three types of assets, right? Alternative investments, the definition is very broad. So it's basically anything that is outside of the traditional investment space. Okay. So it's basically anything that is outside of the traditional space. It's like when somebody asks you to define what is black and you say it's not white, right? But the definition is very broad. It includes things like commodities, real estate, investment in infrastructure, venture capital, and distressed securities. Because of how differently these investments move relative to the traditional asset classes, they are usually a good asset for diversification purposes. So you don't want all of your investments to be moving in tandem, especially in times of crisis. You need a buffer, you need something to kind of provide a lift when the other asset classes are going down. So they have significant diversification as well as income benefits. Now, how we go about determining what investment asset is suitable for you? You have to look at a number of factors. So the first thing you should really assess are your goals and your objectives. Am I in this to make significant returns? Am I in this for the income that I can get to supplement my 9 to 5? You know, you need to determine why you are participating in an investment opportunity. And then you have to look at your tolerance for risk. So risk tolerance is determined by both your ability and your willingness, right? So a lot of persons have a lot of money and they may have the ability to participate in riskier assets, but then if they see that one asset go down by 10%, then they lose sleep, right? So there has to be a balance between your ability to take risk and your willingness to take risk. You also look at your time horizon, how much time I have. If you want to buy a house in 3 years, then your time horizon is 3 years. Your liquidity needs, your tax considerations, and this is a big, it's not so big in Jamaica, right? For the majority of investors, but especially in Canada and the United States, you definitely have to look at investments that will help you to, let me say, maximize your returns, after your taxes are considered, right? Because I know that taxes on investments are very heavy in North America. And then you can look at the legal and regulatory considerations and your unique circumstances. So if you're a Christian or you're of a particular persuasion, you may not want to participate in investments in tobacco companies or companies that are involved in what you call it, cannabis, right? So all those things have to come into play when you determine what type of investment is right for you. Now, there are a number of risks involved. Some of the major ones are credit risk. And this, of course, is a risk that you will lose your money. That has to be at the forefront of your mind, and it has to be accepted, right? Because from time to time, we will have situations where governments or institutions may not be able to pay back the money that they borrow from investors. And then there's market risk. And a good example of that would be what is happening with COVID. And this is a risk that your investments will decline in value because of what is happening generally. So it's not specific to a particular asset class, but it affects the entire market. Of course, there's liquidity risk. You know, sometimes you purchase hard assets like real estate and you can't easily convert it into cash within the time period that you want to convert it into cash. You have to consider that. Concentration risk is a big one. Don't put all your eggs in one basket, because God forbid, if something happens to that one particular sector that you're overexposed to, or the one particular asset that you're overexposed to, then your wealth will be significantly affected. A lot of investors tend to invest in the companies that they work, or invest significantly in the companies with which they work. So I work at NCB. I have a lot of NCB shares. God forbid something happens to NCB, I lose my job and I lose my investment, right? You have to manage that and ensure that your portfolio is properly diversified so that you can mitigate that risk. And then reinvestment risk is also common in a declining interest rate environment. So you buy a bond yesterday or last year and it was paying 5%. And the central bank or the Bank of Jamaica has been cutting interest rate. And so you can only reinvest at lower rates. That is a significant risk for you. And of course, importantly, inflation risk. People tend to put their money in savings type instruments, and the returns that they are getting are being wiped out by inflation. So if you're getting 2% on your investment and inflation is 4%, you're down 2%, right? So let's consider all of those factors when we're looking at investments. But how do we allay these fears? You have to take a practical approach to investing. Now, when you would have considered all your investment constraints and your risk, right? You say to yourself, I know what I'm getting into. This is what I can manage. I can sleep knowing that I've invested in this particular stock, even if the price goes down, right? It's like a marriage. You know that the person has some bad habit. You know that the person is probably untidy, but look here, from the onset, you decide that you're going to deal with this untidiness or these bad habits. So prepare and be married to the process. You need to stay within the parameters of your risk profile. Don't invest in distressed assets if you know that if you're here tomorrow that the investment is down 10%, you're going to have a heart attack. Don't do it, right? Understand the investment that the investment risk that you're taking on and be very comfortable with it. If you're not comfortable with it, stay away from it. Also, you need to understand that markets are cyclical and it will go up and down from time to time. If you look at a graph that shows like stock market movement over time, it is not a straight line that goes up exponentially. It goes up, it goes down, it goes back up, and it goes back down significantly, and it goes back up significantly again, right? So we just need to be comfortable with volatility and understand that this is par for the course. You also need to ensure that you understand what you're signing up for. In the subprime crisis, one of the major takeaways was that investors were being sold assets, and they really didn't know anything, or they really didn't know anything about it, right? So you have to Take time to understand the investment process and the assets. And you also need to design a well-diversified portfolio and have periodic discussions with your advisors. And I put here that they are your flight attendants. So when I go on a flight, and I'm definitely afraid of flying, right? And when the plane shakes 2 times, I look at my investment advisor, I look at my flight attendant, right? And if they look calm, then I'm calm. But if I dare see a smirk on their face, right, it's hell. So the flight attendants are your investment advisors. Talk to them and let them tell you what is happening. Let them tell you the steps that you should take, whether you should exit an investment or maintain your current positions, right? But they are there to guide you as it relates to the investment process. And the last, I think this is the last slide I have. Let me talk to you a little bit about the COVID perspective. Now, we are in very difficult times, and the market has, let me say, never seen a pandemic like this in recent times, right? And a number of us may have portfolios or investments that are currently underwater. Now, if we go back to like the 2008 crisis, the market lost probably 34% there. In 2000 and 2008, the market, eventually recovered, but it took a longer time to recover. The S&P 500 lost about 30% from January to March of 2020, right? And now it is up 68% since the lows of March 2020. So if you stayed invested in the S&P 500, you would have been up relative to the pre-crisis level. And if you had invested more money, you would have been even better off, right? So this is my approach to the crisis. You need to remain calm, right? Understand, as I said, that the markets are cyclical. You need to maintain the investment discipline and reevaluate your budget. Now, reevaluating your budget and your liquidity needs is very important. Now, I go to work in lounge suits and sometimes pajamas, right? I don't need to buy suits anymore. So the $100 that I used to spend on suit, I can pay $10 for pajamas, and then I can invest in $90, right? Unfortunately, some of us would have lost various income streams. And so we have to readjust our budgets accordingly. We're not going out as much anymore. So we can save that money either to contribute to your expenses or to invest. That is the approach that we should take. And then a lot of us have the opportunity to invest in the market at these low prices. Now, I spoke about the S&P 500 performance earlier, but the JSE actually declined by about 35%, right, at the heights of COVID. And now it's only up about 13% since then. So it's still below pre-crisis level. So there are significant opportunities in the local market. Look for those specific opportunities and position yourself for the recovery. And then I spoke about invest savings from the social budget already, and that's a part of reevaluating your needs. So there are a number of opportunities, and it's how we position ourselves to take advantage or to capitalize on those opportunities that will determine, how we fare in the current crisis. Thank you.
Well, thank you very, very much. And the format today is just to flow through our 2 presenters, and then we take questions at the end. So right now, Julian will take us through the financial markets, share some economic conditions globally, and share some additional thoughts on the opportunities arising from the pandemic. So again, please post your questions in the chat. And we already have a few questions before, so we'll come to that at the end of Julian's presentation. But Julian, we're taking it over to you now.
Good evening, everyone. Thanks for having me. Can you see my screen?
Yes, we can.
Okay. Well, you can blame Jermaine for his question, because the questions he sent me for the presentation were very detail-oriented. So I'm going to go in detail. So please bear with me. Hopefully you're not bored. So Here it is, Jamaica's growth story and the COVID-19 effect. Now, Jamaica's economy has undergone a paradigm shift between 2013 and 2019 due to core factors, which are summarized as 5 pillars. These pillars largely remain in place today, which have offset some of the impact of the COVID-19 fallout. Now, the first pillar, the execution of 2 debt exchanges. Jamaica's first debt exchange was in 2010, followed by another, and it was much larger. Effectively, the government of Jamaica reduced its interest payments on debt and extended its maturities. So that is when the debt would have been due to the lenders. This decreased the debt payments, thus reducing the government's appetite for borrowing. Resultantly, interest rates fell significantly, reducing the cost of money, which is interest rates, and boosting the supply of money in the economy as well as in financial markets. This created more room for the private sector to borrow from the capital markets. And just as a point to note, more than half of the total debt stock held by the government of Jamaica was due to locals, whether in the form of individuals or institutions. So debt forgiveness was not an option because it would have had a catastrophic effect on our financial system. So here we can see the downtrend in interest rates over time, partly because of the success of the debt exchanges. And essentially, interest rates are the price of money. So it means that money is becoming cheaper and cheaper, and the supply of money is actually increasing over time. Pillar 2, fiscal consolidation under the IMF. Now, the extended fund facility was established in 2013 under the IMF agreement that we had, and it ended in 2016. And this was succeeded by a standby arrangement established in 2016, which ended in 2019, which began in 2016 and ended in 2019. These moves supported the reduction of government spending and bolstered government revenues. So essentially, when we spend more than we earn, it's typically a deficit. And that was the situation that was facing the government of Jamaica. Now, because of these moves, the fiscal deficit was reduced, and essentially we achieve what is called fiscal consolidation. So this reduced the need for borrowing, because when you have a high deficit, especially for an extended period of time, you need to borrow to fill that gap. Now, we can see graphically that the fiscal deficit was in a certain position in 2013 relative to how it would have changed over the years. So it essentially means that our fiscal position improved significantly over time because of the discipline exhibited under the program. Now, we can also look at it from another perspective, just from the standpoint of debt to GDP, and GDP just means economic growth. So it shows how much debt Jamaica has relative to its national income. And we can see a trend from 2014, where our debt to GDP was in the range of 139% versus 94% in 2019. And the sustainable debt level is 60% according to the IMF. So that's our goal. That's where we're supposed to be healthy according to the authorities. So we've really come a long way. Now, pillar 3, central bank modernization and monetary easing. The Bank of Jamaica, our central bank, took on an inflation targeting regime in around 2017. The priority would shift from exchange rate stability to inflation stability. The inflation target range was then set to 4 to 6%. On another note, the B-Fixit tool was established to quell disorder in foreign exchange markets. And this essentially helped to ease the pace of J-dollar devaluation and resultantly the rise of consumer prices, because a lot of what we consume, a lot of what we use is imported. So what happens in the exchange rate and the dynamics around that typically flows over into inflation. So the government of Jamaica now, they have set a more direct parameter around where inflation should be in order to make prices more predictable. That's the objective. And that helps to make the system more stable. Now, pillar 3, central bank modernization and monetary easing. So we're seeing where these efforts have helped to change the inflation profile in Jamaica, because we're very used to double-digit inflation over the past 10 years onwards. But more recently, we've seen where interest rates have trended downward before hovering within the established band of 4 to 6%. So far, we're on good footing, despite what our pockets might suggest, right? So pillar 4, the global economic recovery and higher GDP growth. International central banks cut interest rates to spur business activity following the Great Recession of 2008. Now, Simone spoke to the financial crisis earlier, so we'd have had some background as to the context of the impact that it had on economies across the world. But coming from this, growing globalization pushed emerging markets like China and India to grow rapidly, while digitization pushed growth in more advanced economies such as Germany and the US. As a result, global trade picked up significantly right up to 2018, but began to lose steam due to Brexit anxieties in Europe, plus an emergence of US-China trade tensions going into 2019. So global growth started to slow down a bit in 2019, even though there was a great level of progress compared to where the global markets were 10 years prior. Now, because of all of these developments, global trade is picking up. We're seeing where tourism was buoyant in Jamaica at that time. So tourism arrivals hit record levels and demand for Jamaican goods locally and overseas improved as a result. Now, construction activity also picked up, combined with infrastructure enhancement, including roads and bridges. And this is also because of our fiscal consolidation. We could afford to allocate more funds to some of these improvements. Now, importantly, there were no major natural disasters in Jamaica during the period. As we know, our economy is very sensitive to natural disasters, and we were fortunate enough to go through a period of stabilization without any interruption. Now, can look at the profile of economic growth over the period. Right now, we've seen that we're seeing where from 2013 to 2016, we've come a very far way because of some of the efforts that were made. Economic growth was largely, it has largely trended upward leading up to 2019. Some of the factors leading up to the end of the period though, included the shutdown of the bauxite refinery, Gisco Alpart bauxite refinery, and also the slowdown in construction activity. So that speaks specifically to the aggressive pace of road work that was happening into 2018, but some of those projects were complete going into 2019. So would have seen a slower pace compared to the prior period, which is why we would have seen that 0% mark there. Now, improved business confidence, pillar 5. The security of an IMF agreement, lower interest rates, stable inflation, and less government presence in capital markets all spurred higher business confidence and improved growth. When combined with a more buoyant global economy, local business conditions upgraded significantly, which in turn lifted profits for many companies. Businesses then hired more people, spent more on fixed assets and inventory, and turned to the capital markets in a bolder way. These 5 pillars enabled a capital market boom in Jamaica between 2014 and 2019. So just a look at business confidence. So I took snapshots of the 4th quarter of each year, 4th quarter 2013 leading up to 4th quarter 2019, and we've seen a significant pickup in business confidence. And business confidence is a major driver of investment, purchasing equipment, purchasing property, purchasing inventory, raw materials, and the hiring of people. So on the next slide, we have where unemployment trended downward significantly because of the factors that we just listed. Because business conditions significantly improved, because essentially Jamaica was like an ill patient and in intensive care, and basically Jamaica got a chance to leave the hospital in 2019. So it's a big deal, right? I know it's just numbers and it sounds like mumbo jumbo, but Jamaica left the hospital. That's a great thing, you know, figuratively speaking. So moving on, going to talk about the JC. So there's a JC rally from 2014 to 2019. So as mentioned, the lower rates locally and globally in terms of bonds, it drove investors to look for returns in equities. And equity is just another name for stocks. So high Jamaican dollar money supply fertilized the conditions for raising capital, both for large and small businesses. So businesses need to raise capital in order to grow, right? Whether they want to get a bank loan or they want to issue a bond, like Simone said earlier, or they want to turn to the stock market to issue new shares, to use those proceeds to build out whatever plans that they want to achieve. So the local equity market saw 38 IPOs, 21 from the junior market and 17 from the main market over the period. And this included Wisynco, Fontana, and Mailpack. And also the first APO was done by JMMB Group in 2019. So there's also an influx of new investors due to the increased popularity of financial literacy campaigns. Also, the listing of Wigton Wind Farm in 2018 also catalyzed market participation and interest. So the JSE main market index grew 31.7% in 2018, which landed it as #1 in the world in terms of growth in an index. And an index is really just a family of securities. So it can be a family of stocks that are grouped based on similar characteristics, or it can be a family of bonds or whatever the case may be. So here we're talking about a family of stocks, and that's what we're calling an index. This was followed by growth of 34.26% in 2019, landing the JSE in the top 5 again at the #5 spot globally. So here's a graph. The main and junior market indices grew 532.39% and 341.9% respectively over the review period. So that's from December 31st, 2013 to December 31st, 2019, over that period. That's how the indices performed. Now we want to compare the main market with the S&P 500 over the same period. Now, and the S&P 500 is also an index. So the S&P 500 grew 74.49%, while the JSE grew 532% over the period. Now, I know many Jamaicans like to talk about buying US and they want to say, well, why should I buy Jamaican dollar stocks when I can just buy US cash? And there might be a place for that, but we just wanted to put it into context. So the Jamaican stock exchange, the JSE main market index, rose 532%, while the J dollar depreciated against the US 24.62%. So even when adjusted for devaluation, you still would have seen significant gains. Now, the COVID-19 effect. Following growth of 0.0% in Q4 2019, which we also saw on the graph earlier, the economy declined 2.3% in Q1 2020, 18.4% in Q2 2020, and 10.7% in Q3 2020, putting Jamaica in recession territory. Jamaica's economy is expected to contract between 7 and 10% overall for the year of 2020, and this is underscored by the fallout, particularly by the services sector due to the COVID-19 outbreak and the restrictions, etc. And clearly, this would have been led by the precipitous fall off in the tourism category. Sports, restaurants, and entertainment sectors also saw major declines during the period. Now, the goods producing sector had some challenges as well, especially in manufacturing. They were hit by weaker trade conditions locally and internationally. But on a positive note, construction remained robust, and also agriculture saw some buoyancy, but to a lesser extent. The closure of schools hurt producers, while the closure of the Gisco Alport bauxite refinery caused a major growth drag from the second half of 2019 to present day. So pretty much a lot of those jobs that were in place have not really been replaced by any other industry. So that has caused a growth drag and a fall off in income levels, particularly in that section of Jamaica, Manchester, St. Elizabeth, etc. So unemployment rose from 7.3% in Q1 2020 to 12.7% in Q2 2020. So that's a major fallout, according to, and this is starting data. Now, business confidence, on the other hand, fell from 150.7 in terms of the points in the index. It fell to 115.4% in Q2 2020. So in the span of a year, we would have seen a significant fall off in business confidence because of all that we just discussed. As a result, various listed companies have seen a slide in profitability as a result, including those in financial services, tourism, and entertainment. So in financial markets, the COVID-19 outbreak itself triggered panic selling, and Simone spoke to this earlier about the fall off in the main market index of the JSE, and also the decline in prices on the S&P 500 index too. So from December 31st to now, the JSE main market fell 23.63% for the year of 2020, while the junior market declined 19.3%. Now, just to show it graphically, this is the main and junior market indices. You know, we saw where there's some recovery, as Simone mentioned, but it's not where it used to be. And that is on the leftmost part of the graph, which is at the top. But on the right, we're seeing where markets essentially remain flat. So that's an investment opportunity, as Simone mentioned, because they can get companies at a cheaper price compared to the year before. Now, compared to the S&P 500 index, you've seen where the S&P 500 index has been recovered at a much faster pace. And essentially, the market is now higher than where it was before the outbreak even happened. So that is significant. And here we're looking at, on the next slide, we're looking at how the exchange rate has moved, which is a black line, versus the JSE index. And that's over the span of 2020. That's the end of 2019 to present day. And that zigzag movement that you would have seen is largely because of the stabilization efforts of the central bank moving in to stabilize the FX market. Now, on a positive note, Jamaica's fiscal accounts are ahead of budget, recording a fiscal deficit of 76 billion versus the expectation of a deficit of 81 billion as at November from the start of the fiscal year. On another positive note, Jamaica's credit rating was affirmed at B+ by Standard & Poor's ratings agency, but the outlook remains negative. So it means that there's a chance that we could get downgraded, but the fact that we've kept our rating, despite everything that we mentioned before, is actually excellent. So it means that there's some confidence in Jamaica's ability to recover. Now, the NIR, which is our level of foreign reserves, they remain healthy at 3 billion US as at December, which is another good sign. And due to these and other factors, the economy is expected to recover to pre-COVID levels in 2023, according to BOJ estimates. And from the IMF perspective, they're expecting Jamaica to grow 3.6% for the year of 2021. So we're seeing that it's not all doom and gloom. Now, on the international front, there has been more than 10 trillion US dollars in fiscal stimulus issued by the federal government. And there's also a new package of fiscal stimulus on the way, tracking almost 2 trillion. There has also been significant intervention from the central bank to increase money supply, just to keep things stimulated. And after declining 34 in terms of economic growth, after declining 34% in Q2 2020, the economy then grew 33% in Q3 2020. And in reaction to this, and when I said this, I'm talking about the stimulus, I'm talking about the fact that the economy recovered in the immediate quarter after. The S&P 500 rose 16.64% between the end of 2019 to present day. Now, in terms of investment opportunities, just to build on a lot of what Simone covered, interest rates are expected to remain low for a while, at least until 2023, based on what the authorities have shared. Interest rate bearing investments such as fixed deposit, money market accounts, and bonds for the most part are expected to exhibit lower returns compared to 5 or 10 years ago because of this. Now, asset prices, and we're talking about investments like stocks and bonds, have largely recovered from the sell-off in March 2020. More so, international stocks in contrast to local equities. And Both the J and the US are expected to weaken over the medium term due to inflation because of all the intervention that had to be executed to stimulate the economy again. So just a few more points. Dual currency exposure is encouraged to hedge against the devaluation. Recovery is expected to be unevenly spread across sectors. So it depends on what sector you're investing in terms of the companies that you invest in, because the sectors are not going to recover in the same manner. So consumer staples is expected to do well. Technology is another good sector. And these are just for you to look at a sector level. You have to do further investigation, of course. Travel, banking, and entertainment might not do as well in comparison. And it's good for you to seek income in this time because of the inflationary pressure. So looking at dividends, rental income, and so on might work as an income cushion. However, it's optimal to look at a longer investment time horizon to ride the wave of recovery because of all that is happening. So it's going to be a marathon and not a sprint. Final reminders. So personal needs and risk appetite precede investment returns. As a culture, we're very big on investing for the sake of returns, but returns have to be put into context. What's good for Simone might not be good for me, because she might be a Christian who doesn't want to invest in a cigarette company like Carreras or a gambling company like Supreme Ventures, but I might not have that inclination. So it's not all about returns. The other point is you have to gain guidance from licensed professionals, because if something goes wrong, you should be able to seek some recourse. And finally, avoid unregistered financial schemes or instruments, because there are many things that are popping up now. You hear different people coming up with different plans. For example, you hear about cryptocurrencies. Cryptocurrencies are getting popular again. There are some cryptocurrencies that might be viable while some aren't. And some really have nothing to do with investing at all. You know, it's really another type of scheme. So it's good to be aware of these things. So that's the end of my presentation.
Wow, thank you very, very much to both Simone and Julian. And we're going to go into the Q&A section now. But before I do, we just want to welcome everyone that's on the presentation, the webinar with us today, especially our friends and non-Ardenites that are on Facebook and also on YouTube. We have quite a few questions, actually. I'm going to start with a few, and then Rosie will also take a few that came through the chat. The first one is for both Simone and Julian, and my second one will be really for Simone. But the first, simplest, easiest question, I'm sure, is if someone is outside of Jamaica and want to invest in the market in Jamaica, what are the steps that they need to do? That's the first question. Simone, Julian, both of you can just take that one for me.
All right, so for investors who are not in Jamaica, but you want to participate in locally issued offers, you first need to align yourself with a broker. So you need to open a brokerage account, and that will involve a number of steps. So they may ask you for your TRN or social security number, whatever unique identifier you may have. So you first need to open a brokerage account for NCB capital markets, and I can say for proven as well. The process is quite easier, or it has been made easier via a platform. So NCB Capital Markets has Go IPO, where you can open an investment account as well as participate in IPOs as well as other offers on the market. So the first step that you need to do is to open your brokerage account, get in.
Breaking up, Simone. Or I think Simone may be on mute.
I think she's hung.
Okay. Just to follow up on that, Julian, I don't know if you want to add anything, but when Simone comes back, if you're willing to place or put your contact information in the chat so that the persons that are on the webinar today can reach out to you, because when we speak to the folks in North America and Canada, opening an account in Jamaica I've been told it's like drawing blood and giving DNA. So Julian, if you have a word or two on that, I have another question for you until Simone comes back. But what are your thoughts on that? If you can share contact information for you so we can reach out to you directly, and you could possibly put us on to someone to open that brokerage account that Simone mentioned. But your thoughts on that?
Okay, so Simone was speaking about the importance of opening a brokerage account, which is different from a bank account. Many investors, or prospective investors, I should say, get it mixed up. So there's a bank and then there's a brokerage house. So the bank would be, for example, NCB, and the broker would be NCB Capital Markets. So just because you have a bank account with NCB does not mean that you can participate in investments. So that's the importance of opening a brokerage account specifically. Now, the reason it has some challenges is because of regulatory requirements. It's called KYC, Know Your Customer, and there are certain measures that are being put in place to avoid possibility of money laundering taking place. There are many people, or there are many elements at play that might expose these institutions to certain kinds of risks. And in order to prevent that and to make our financial system safer, we'll have to have very stringent measures in place. Now, we have a platform called IPO Pro, and investors can participate in that. You'd need your ID, and that would be, for example, your national ID or your driver's license or your passport, your TRN, or whatever tax registration number you use in your jurisdiction, some proof of address, and also, in some cases, something verifying your identity from a notary public. Those are some of the requirements that would be necessary for opening a brokerage account. And you'd establish a relationship with an advisor.
All right, welcome back, Simone, and thank you very much for that, Julian, because that's a very pressing question within, persons in North, because quite a few persons on the meeting today are overseas. They're trying to find the best way how to open an account. So my question also, I'm hoping we can get that though, where we can get a contact information for you, possibly in the chat or possibly through Jermaine, that you could share throughout the persons who are on the call today, so that we can reach out to you and you can point us to the right direction and to point us to what the steps are to open a brokerage account.
Yeah,
I'm going to shift a little bit to Simone. I know between investments and what's happening in Jamaica, it's really, very good, especially from the JC market. Real estate is another fantastic investment opportunity in Jamaica. And I understand that there are real estate-backed unit trusts or mutual funds. Can you tell us a little bit about that, the ease of it, and what has it been like in Jamaica?
All right, so real estate in Jamaica has been one of the better performing investment assets. And certainly if you look at the volatility of real estate versus traditional investments like stocks and bonds, it certainly bodes well for a smoother investment experience. So the prices are not as volatile. The truth is that I've not seen a case in Jamaica, or I've never seen a period since I have sense, right? where property prices have plummeted significantly, right? And I'm young, so maybe it has happened before, but certainly not since I've been practicing. Now, there are a number of ways that you can gain access to real estate. The truth is that for the average individual, designing a portfolio that is focused on real estate investment may be a little bit difficult because of the significant capital that is required for the investment. And so there are a number of unit trusts and mutual funds that are focused on this, and it provides you with access with relative ease because you can participate in the asset for a smaller initial outlay. So NCB Capital Markets, we don't have a fund or a unit trust that is focused on real estate. Proven has one. I can tell you that there are plans to launch a fund that may be you know, may take a different spin on it. But there are various investment houses, proven, JMMB, a number of others that have real estate focused unit trusts. There are also a number of real estate companies that are listed on the Jamaica Stock Exchange, so like Kingston Properties is a real estate investment trust. Panjam, a large part of their business actually focus on commercial real estate. So there are actually stocks that can provide you with that exposure in addition to unit trusts and mutual fund investment vehicles.
And Caribbean Property Fund.
Correct.
Excellent.
And that provides you with exposure to real estate in the region, not only in Jamaica.
Excellent, because I understand that that exists, and that may be something that the folks in North America may be more familiar with, but that particular type of instrument is available in Jamaica from a real estate investment standpoint. But as you said before, you need to have that account at a brokerage before you can start doing all of this. So again, we need to get in touch with either both of you to see how best we can open that brokerage account. I'm going to have one more question to Julian, and then I'll pass it over through to Rosie, because I know she has quite a bit of questions as well. And Simone, you could jump in if you want to share as well. But what industry or what innovative idea should investors be looking at now that you believe will continue to grow over the next 5 years? Julian, that's for you.
Off the bat, anything that is heavily oriented towards technology. So what we're seeing right now is a massive paradigm change, especially globally, where businesses are becoming more digitized, whether it is through their delivery channels or through the construction of the product itself. So for example, a business like, and this is not investment advice, we're just talking speaking hypothetically.
Understood.
Going to look at a Fontana. Typically, Fontana relied strictly on walk-in customers, and it still does. However, because of the pandemic, they've actually accelerated their delivery services, and they've been able to actually get products to their customers while the customers are at home, just for convenience. And the customers can order on digital platforms or through digital channels and have their goods delivered to them through Fontana. So it's key to look at businesses that are making these kinds of decisions and to look at industries that are very much looking at how they can become more advanced in terms of the technology, because that's where the world is going. And I think in the next 5 years, we're going to see a more rapid pace of innovation around technology than the prior 5 years. So right off the bat, that's one place I would say we can look at.
Excellent. Simone, anything you want to add before I pass over to Rosie?
Sure. I would look at companies that are defensive, and companies that are defensive will do well or will do better than others in various economic cycles. And technology companies is one of those. Companies, pharmaceutical companies tend to be one of those as well. We don't have a lot of pharmaceuticals on the Jamaica Stock Exchange, but there's certainly a number of them in the US market. You could also look at, and I'm going to say alternative investments, that's my baby right now, but it is a growing asset class, and a number of pension funds or large institutional investors have been increasing their allocation to alternative investments. So you spoke about real estate. Real estate is a type of alternative investment. Investment in private equity, commodities, infrastructure assets, right? Those tend to be very resilient in times of economic downturn, and they can generate significant cash flows to investors. So they are being made accessible to regular investors like yourself and myself, right? Through various investment vehicles. So we should take advantage of that and look at it from a portfolio perspective. So we have the stocks and bonds, but carve out a portion of your portfolio for different types of investments like alternative assets.
Sounding good. We definitely need to have that brokerage account. Rosie, over to you, because I know you have some questions.
Sorry, Audley, you
Sure.
keep mentioning that brokerage account. Sorry, Rosemary. And, you know, I do have a problem when you have a qualified account in Jamaica, you have to set it up with your TRN and all the fanciness that they need. Why is it you can't port that information over to your, you know, your brokerage account if you're in the same institution? Why do you have to go through a process of starting over? Or maybe it has changed, maybe whatever you could say.
So let me take a stab at that. There are different regulations governing the different institutions. And while a number of institutions are looking to basically have you set up with an what I would term an omnibus account, and have you set up on the bank side or the commercial bank side, as well as the brokerage side, the regulations don't facilitate it as smoothly, because the truth is the commercial banks have different regulators than the investment arms of the companies. And so usually there is a Chinese wall between the two. So the bank can't easily give your information to the investment arm. We can get in trouble for that. So that is the reason you can't easily port that, but I know that there are steps being taken to make it a little bit easier for you.
Okay. Yeah, because those things can be prohibitive if, you know, for somebody living anywhere outside of Jamaica, having to, you know, go through the whole account setup again. It just, you know, as you said, a Chinese wall. You know, it's just painful, put it that way.
Yeah, it's just currently where the system is now, but hopefully things will change, because the commercial banks, I understand, are regulated by BOJ, and the investment houses are regulated by FSC. So there are differences where that is concerned. So we're not there. Jamaica's not there as yet, Denzel, based on my understanding, and, you know, Julian and Simone can back me up on that, where you just key in one number and everything is pre-populated. So if you're used to that in North America, it's not there yet in the Jamaican scenario.
Yeah, I have a question. The whole issue of opening accounts, though, as a follow-up to what Denzel was saying, it's kind of insane. And I speak to the comfort level as a person overseas. I would feel uncomfortable sharing my SIN number with any institution in Jamaica. I don't know about the security and the privacy of that. And to me, the regulations as they are today are extremely overbearing. And what essentially will happen over time is that the kind of capital that you probably have coming into Jamaica will just not be there. Because when you ask people to prevent their SIN number and all those kind of arrangements, you know, a lot of people are comfortable with the fact that what level of security, how can it be protected, right? So to me, that's a challenge. And to me, the market in Jamaica appear to be over-regulated, right? You can have a relationship with an institution for 30, 40 years, and they'll probably treat you like you're a new customer, and your transactions hasn't changed. Nothing on your profile has changed. So to me, it's kind of insane. It doesn't make sense.
Take your point.
So I don't know to what extent the participants in the market, the conduits like the brokerage houses, have any influence on the policy framework and the end game of what it looks like, but it does make sense.
Take your point. Simone, if you want to say anything, but if I can before, it's also wise to possibly lobby those things from a group standpoint. So things like that, you can always reach out to the Jamaican diaspora. There's a very large entity that have these kind of regulatory or discussions with the government. So that's one way to look at it. Simone, anything to add?
So what I would say is that the privacy of customer information is priority in Jamaica. And that's probably one of the reasons why you would think that the market is over-regulated, because we can get into serious trouble if that is breached, right? I would say it makes sense, though, to find an institution that you're comfortable with from an investment standpoint. It does have some value. You alluded to the fact that you're not comfortable with providing your SIN number because, you know, the capital may not be there. The truth is that the Jamaican market is very developed, right? It's the most developed within the Caribbean. And there are a number of persons who would have seen significant growth in their wealth by participation in the local market. And as I said, security is priority for all the institutions. And I can say that you should not have a lot of fear as it relates to the disclosure or breach in confidentiality as it relates to your information.
Well, look at it this way. If in larger scale organization across the globe, where they have heightened security and all kind of tools, people still hack into them, right? So I don't know. I don't think anybody can confidently make statements like that, right? Anyway, that's what I'll leave it at that.
Yeah, we'll take your point, Clement, and take your point. Rosie.
Thanks, Audley. And she can confidently make that statement because of Jamaica regulations, and we are now in the process of implementing the Data Protection Act, which is going to even strengthen that some more. And that act actually exceeds, I think the closest I come to it is the one in Europe, which really tightens what it is that you can do with people information and how you actually deal with people information and the amount of information you can collect, or you store it, where you store it, who has access to it. So yeah, it probably is going to get a little tighter as to how they collect your data and what exactly they do with your data. So I think she's doing it based on that background, right? Now let me get to what I'm supposed to do. So before I get started though, Jermaine has a question he wanted to ask. So I'm going to ask him to go ahead.
Yes. All right. Either Julian or Simone can answer this. Many people see investments only as a quote unquote rich people thing. What kind of advice would you give to persons who just have a $10,000, $20,000? Is investment for them? Also, I have been observing Twitter, and I've seen a number of young investors. They are making profits on the Jamaica Stock Exchange, even during COVID, during 2020. Can you speak to why this is so? I don't know who wants to do that.
All right, so I'll answer you. Okay, so firstly, investing is definitely not just for rich people. I'm not a rich person, so just for disclosure, prime example. So the idea is, it's all about context, and it's about creating a framework that we can manage and incrementally improve as we go along. So let's say, for instance, our expenses come up to, and I'm speaking hypothetically, come up to about 70% of our income. When we do our budget, our main expenses come up to 70%. So we have 30% in savings. We can allocate a certain portion of our savings to just staying in the bank account in case anything happens. Let's say, for example, the majority of it. And then we can take another portion of that to actually look at investing and starting small. Now, what do I mean by starting small? You mentioned a figure, $10,000 or $20,000. It's not a situation where we have to wait until we have $1 million, for argument's sake, to invest. Just for context, a stock on the stock exchange might cost 100 Jamaican dollars, and that's an expensive stock, right? And you can even buy 10 units of that stock. So 100 times 10 is 1,000, and then you factor in fees, so that's probably another, I don't know, probably another $200 or so. So that's 1,300, and you can build incrementally. For example, monthly or every other month, or whatever the case may be, based on your goals and what you're interested in, and then you take it from there. So that's one way to get started.
I am living in Massachusetts, and I am wondering how I can send money from my state to my NCB savings account.
and subsequently, if I want to invest in any instrument. But the main thing is I would love to send money from my account, from my state, to my savings account in NCB. It's actually in Portmore.
Just wire it.
How
Just
much?
wire the funds.
Right. Well, how much would that cost? Is there another way to send it?
I'm not sure how much it will cost.
The last time I checked, it have cost about $30 to send it from my
30 US.
Yes.
Yeah,
And that is
that's
actually,
correct.
yeah, that's actually the amount that we're sending. So it would make sense to spend 30 to send 30.
Well, wiring is the most efficient way.
Efficient, but expensive. But so if not, then there's no other way.
Not to my knowledge at this time. Unless you want to send it to a family member for them to deposit it in their account.
Okay, understood.
Yeah.
There are also, some online platforms that you can use to send money. I see one just posted it. It's called Zoom for XOOM. It is a platform, I think it's linked to PayPal, that you can use to transfer money to Jamaica.
Does NCB use Zelle? Because I know my citizen account use Zelle up here. I don't know if NCB uses Zelle.
I'm not sure. So let me make this disclaimer, right? I work for NCB Capital Markets, which is part of the NCB group, but there are a lot of things on the commercial bank side that I may need to get back to you on, because I don't have that information readily available, right? So if you ask me questions that are related to commercial banking, I may not be able to answer you immediately, but I can get the responses and get back to you.
I'd appreciate that, thanks.
Yeah, that's a very good segue as well too, because if you put it in the chat, Horace, in the chat, well, for everyone, Jermaine will have access to the chat thereafter after the meeting, and he'll be able to try and direct the questions to the presenters thereafter.
I'm trying to get the everyone prompt, but I'm not seeing everyone. That's why I sent it to you. I'm not seeing everyone prompt in my participants chat. So
understood.
Okay. Jermaine, could you look at that setting, please? They might only be able to talk to the host only.
Okay.
Okay, let me see. Let me check it.
Oh, I actually can change it. I just did.
All right. So Rosie, any other more questions?
Yes. And guys, you can check the like NCB, you can take a look at their website. They do have a mobile wallet. I am just not sure how it's linking to your system, because just like how some of what is in the States will exclude Jamaicans. I'm not so sure if all of ours can do the same thing by linking to your bank account, or you can send from there to our mobile wallets. But we do have mobile wallets, so just check NCB website for some of that. All right, questions. First one is, what is your take on the newly launched private market on the JSE, and who is it suited for? Anyone here can take it.
Simone, that's your baby. Hallelujah.
Simone is still with us?
I'm not so sure. She may have connectivity issues. Julian, can you take that one?
Okay. So there are the private markets and the public markets. Public markets refer to instruments that are held by the investing public. So that would be the stocks that we talk about on a regular basis, because individuals like yourself, who and including me as well, we can participate in these companies without being internal personnel. That's what it means by public markets. However, there's another category of investments that speak to the private markets. Now, this is a smaller investor base, and because the investor base is smaller and the information flow is not as publicized, there are different dynamics around that. So there needs to be a separate space for trading those securities. So let's say, for example, I start a company called ABC Limited. The company is not listed on Jamaica Stock Exchange, but I want to borrow money to upgrade my firm. So I issue a bond for 50 million Jamaican dollars. And I offer that bond to a small group of Jamaicans, 3, 4, 5, 6, 7, maybe up to 10 persons to invest in my bond. But my bond is not listed on the public markets. That bond would be shared through a broker network. So NCB, for example, or Proven Wealth would be my broker. So Proven, being my broker, will help me to find those 10 investors to raise the money to finance my bond. Now, if anyone wants to participate in that bond, or if one of those 10 investors want to get out of that bond, they'll have to use the private markets. And that is why the private market exists. It's a way of helping investors to move around those kind of instruments that are not listed on the public markets. Right now, it's strictly a broker-to-broker network. That's called over the counter. So somebody from Proven Wealth will have to call their entire client list to find out which other investor would be interested to replace that investor who wants to exit from the bond, or they'll have to call Simone or somebody on Simone's team at NCB Capital Markets to gauge the level of interest to participate in that bond to replace the investor who wants to come out of it. Because if it was just on the stock exchange, you wouldn't need to do that. You just put in a sell order, and the people who are on the public market would see the sell order and then put up a bid to buy it. But that doesn't work the same way in private markets. So I hope I gave you the dynamics and helped to clarify the difference between the two.
One second, Rosie, can I add to that? All right, so I think you asked about who can be involved in that.
Yes.
By regulation, there are a list of investors known as accredited investors, right, Julian? And they have right, and they have to have a certain minimum investment. And in Jamaica, it is 10 million Jamaican dollars. So those are the persons who would have access to the private market.
Yes, Jeremy, because these investments are a bit riskier because they're not as easy to exit. So an investor has to have a certain amount of capital to take on that amount of risk. Because going in and out of an investment on the public market is far easier than going in and out of an investment on the private market. So one has to qualify to be able to withstand that kind of risk. Hence the term accredited investor based on that criteria from the FS.
Excellent.
Okay, thank you. All right, next question is, how do you identify a good investment advisor?
An investment advisor should be honest, qualified, experienced, and willing to help you. Because no investment advisor will know everything. They should be able to defer to other professionals if their knowledge has limitations. The investment advisor should also be equipped with information. So you might ask the advisor, okay, what are the 10 best stocks for the year? They might not necessarily reel off all the 10 best stocks. The first question they should ask you is, what is your risk appetite, given that you're a new client? Or what's your level of experience in investing? To gauge what you're willing and able to tolerate in terms of risk. Because it is upon that information the recommendation should be based. Not necessarily 10 random stocks that might run up on the market for argument's sake. So that's the kind of approach. And then a real professional investment advisor is supposed to give you a tailor-made solution based on what it is that you need and what you're able to do, as opposed to trying to push a particular product.
Thank you, Julian. Is Simone back with us?
I'm not seeing her as yet.
Yeah,
okay. All right, continuing. What kind of investments would you recommend for a retiree who is prepared to take moderate risk?
Okay, so okay, so first of all, retirees, they have to have a more conservative risk approach compared to someone who just started working. because the time is not on their side. So whatever losses that would have been involved in any investment at all would be more difficult to recover from because of the time factor. So that contextualizes the need to be more conservative. Another point is the fact that retirees typically need income. So income-bearing investments would rank as priority over investments that don't pay as much in terms of income. Now, it's based on the current portfolio of the individual as well. Because if the individual's income needs are already filled, then one might be able to say, okay, I already have my fill in terms of income. Maybe I can sprinkle a little bit of what is called capital gains in my portfolio. That means the asset will go up in value just in terms of the price. Those kinds of investments are different from ones that are primarily focused on income. So it's about assessing where you're at, what you already have, and your needs in terms of income, because that definitely should be the priority at that stage of life.
Yes. All right, another one. Is purchasing stocks better than investing in mutual funds for someone who is close to retirement?
Well, we can look at it from different perspectives. So let's say, for instance, we just spoke about income. Let's say, for instance, a stock, any stock, might have a certain amount of dividends that they pay out in cash to their shareholders per period, whether it's semi-annually or quarterly. Now, if your need is income, it might be better to go through a dividend-paying stock as opposed to going into a mutual fund that doesn't pay dividends. So in that case, it would be good to look at the dividend opportunity because of the income need. However, there are mutual funds that pay a dividend, but they aren't as bountiful as those, as the universe of stocks that pay dividends, for argument's sake. So just from a purely income perspective, the investor would have more options to choose from, strictly in terms of income, in the stock arena versus the mutual fund arena. On the flip side, in terms of diversification, it's easier to diversify through a mutual fund because a mutual fund is already a managed portfolio. It already has a mix of different instruments in it. So let's say, for instance, I am a retiree and I have 5 bonds in my portfolio, and these bonds are generating a certain level of income for me. I personally don't need any more income based on my situation, and these bonds are exposed to 3 different industries. If I invested in a mutual fund, I'll be able to get investment exposure to an industry that the bonds are not exposed to. That's a way of diversifying to a mutual fund. Because 1, remember, I don't need the income based on my personal needs. And 2, I want to get exposed to a different economic sector through investments so I can use the fund to do that. And the fund, again, as I mentioned before, is professionally managed by an institution. So it's already a portfolio. So that is giving me a chance to bring down my risk in terms of diversification and having a professional on my side instead of taking all the risk on my own. Because when I build a portfolio, on my own, not being a professional, that has a certain unique level of risk as well. I might not be able to manage when market conditions change, etc., etc., etc. So these are some of the things to consider.
Okay, all right. We might be running out of time here. Let me move a little faster. Oh, all right, let's try this one. Why would anyone invest in Jamaica when the economy is heading for a recession? What are the attractive elements inviting an investor to take a risk on Jamaica?
Okay, so earlier in my presentation, I essentially explained that Jamaica is coming from a situation where it was in the economic intensive care. In 2013, in terms of our fiscal position, in terms of our debt levels, in terms of the stability of our inflation, we're essentially in an emergency position. We are no longer in that position. So it means that if we were to get hit by COVID in 2013, it would have been different than being hit by COVID now, because our resilience has been built up over time because we have improved our economic characteristics. What am I talking about? Our debt is lower, we have a smaller fiscal deficit, we have lower interest rates, our capital markets are more buoyant, and there are many other factors at play that show that we are in a better position to withstand shocks such as COVID-19, for example. Now, pivoting from this, you want to invest in a territory that is exhibiting a certain level of resilience to shocks. So one way of showing how territories are resilient to shocks is by looking at their sovereign credit ratings. Sovereign just means at the country level. So you have sovereign ratings and you have corporate ratings. Corporate bonds, which are bonds issued by companies, have corporate ratings, and bonds issued by countries have sovereign ratings. Now, Jamaica's sovereign rating is at B+, ranked by Standards & Poor's ratings agency. The outlook is negative, but we kept our rating at B+, even though COVID impacted us the way it did. Our tourism industry was hit very hard. We lost the Gisco Alpart bauxite refinery, and many other sectors went under significant stress, and we kept our rating. That would not have been possible in 2013. Our rating was actually at D. D means default. It's just like school. Getting B+ on an exam is much better than getting a D. So Jamaica has moved from D to B+, and we have not lost our B+ rating despite everything that has happened regarding COVID. So that speaks to the level of risk that you're taking. Jamaica, apart from all of these things that were mentioned, Jamaica has been able to demonstrate a certain level of transparency to international authorities. We have been communicating with the IMF, we've been communicating with the World Bank. As the pandemic hit, we were able to issue the fiscal stimulus under the CARE program, right? The government has been responsive in issuing that kind of counteractive measure in order to reduce the impact on the poor and vulnerable in Jamaica. And the rationale behind that step was clearly articulated by the government. These things are very critical in terms of risk because it shows how sustainable economic activity can be in a country. And this lays a foundation for investments in Jamaica. So I'm saying that we've come a far way, we've kept our rating, and essentially all the parties at play have come to a consensus that Jamaica has the ability to recover faster. And some of these entities include the World Bank and the IMF. So it's not me, so.
Good point. An easy one. What's the difference between an investment advisor and a financial advisor?
Okay. Under the laws of Jamaica, financial advisors can constitute individuals who have a license to give recommendation for financial services in general. Those financial services can include investments, it can include insurance, it can include certain kinds of legal advice that are linked to financial instruments. So it's broader. So a financial advisor may or may not be involved directly in investments. An investment advisor, however, is particularly focused on investments, and this would be typically financial securities, stocks, bonds, and other listed vehicles such as your REITs, mutual funds, etc.
Overseas, I believe it's mainly financial advisors. They tend to do the entire gamut, including
Yes.
being very versed in investment.
Yes, overseas is a little different, which is why I said in Jamaica specifically.
In Jamaica, yeah.
Because I think you can hold both licenses at the same time in overseas. Actually, you can be an investment advisor and you can also do insurance and practice both simultaneously, if memory serves me correctly. But in Jamaica, you have to do one at a time.
Yeah, we haven't quite agreed as yet to go across. All right, the other one is investment in Jamaica from overseas. Oh, I think this means that somebody's overseas investing in Jamaica. What are the tax implications on the overseas end?
Okay, I'm not well versed on that because I'm not a tax advisor or a tax expert, but I can tell you the little.
Julian, let me help then.
Okay.
In the
Sure.
US, you are taxed on your worldwide income, regardless of where you get it from.
Okay.
So it's taxable. Similar in Canada, I believe. But guess what? We have a tax treaty with both
Double
countries.
taxation. Mhm.
So you get to reclaim the tax that you pay in any one country. All right. So when you invest in Jamaica, you will get your certificate that says you have paid the tax, and you apply that when you're doing your tax returns. We're kind of running out of time, so you see me running quickly. One more, Julian. What are the top 5 investment sectors with the greatest return that with the greatest return prospects in international markets, particularly North American market? Want to have a go at that one?
Okay. So again, I'm not giving advice. I'm just telling you what I've observed. In terms of sectors, I spoke earlier to technology, and I also mentioned consumer staples. Now, consumer staples directly constitute companies or entities that issue products that are necessities. So basic food items, for example. So for example, like just hypothetically speaking, like a separate, they issue, they distribute porridge, they distribute soap, they distribute butter, cooking oil, things that are basics. Those things constitute consumer staples. So regardless of what is going on in the economy, those sectors are what we call defensive. It means that they are likely to do well under times of economic stress. So that's one area. Another area I mentioned is technology. Another one Simone mentioned is pharmaceuticals. I think that the advance in technology will lead to further development in innovation in healthcare, and that can have significant tailwinds for where healthcare and healthcare related services go in the future. And that could definitely be an area worth considering.
Weed?
Yes.
Weed?
Weed. Well, weed is a bit early. Weed is a bit early. There's a lot of research and development to be done still on weed and what can be done through weed. But I'm not saying you can't enjoy returns. It's just a matter of context. Now, when you're investing in different avenues, you want to look at the life cycle of what it is that you're investing in. Things like electronic vehicles, things like AI, right? Artificial intelligence, things like cannabis. These things are fairly young compared to other areas. And when you have a younger project, it means that the level of risk is higher because there's still a lot of failing to be done to master the business model pretty much because of how young it is. For example, take automotives. It took decades for car companies to master manufacturing vehicles, and manufacturers still make mistakes because of how technical they are. So what I'm saying is you want to look at the life cycle of different avenues that you're considering as an investor and juxtapose that against the risk. So weed, I definitely believe, is something that is young and the risk level is higher compared to other areas. That's not a deterrence, but it's something worth considering.
All right, I must apologize. We have had quite a bit of questions and discussion. I'm going to do one last question. And if you have not seen your question being answered, not heard your question being answered, I'm going to ask our presenters to place their information again in the chat and that you just reach out to them. The question I'm going to take last is one on the cryptocurrency, and that's because we haven't quite had any discussion on it. This individual indicate the reservation regarding, you understand the reservations regarding cryptocurrencies. I have garnered some knowledge and have profited from the crypto investment. What banks in Jamaica authorize purchase of cryptocurrency, and what crypto wallets, if you know any, work in Jamaica?
Well, in terms of where we are now, we don't have official channels that allow our clients to participate in cryptocurrency or cryptocurrency-linked investments. We're still coming up the curve where that is concerned. However, what I will say is that investors who want to participate can use their app and get onto a platform like Coinbase. Coinbase is an avenue through which individuals can participating in purchasing cryptocurrencies. And that's regardless of where you are in the world. Now, in terms of cryptocurrencies, there's a lot to consider. There are hundreds and hundreds of different cryptocurrencies, but the basic idea is that it's an alternative means of conducting financial transactions. Now, that's it at the currency level. Beyond that, there's a technology behind it called blockchain. And the blockchain can allow different computer programmers to build apps on top of them. So we notice in a website, it has HTTP, www. blah, blah, blah. HTTP stands for Hypertext Transfer Protocol. So it means that there's a protocol there that allows the website to be built on top of it. Similarly, cryptocurrencies allow different apps to be built on top of those currencies. And that's a part of the investment thesis. The argument is that new technologies and new financial solutions are going to be built down the road, and many of those solutions are going to be built on top of cryptocurrencies, which is why people want to invest in them now, so that they can profit from the viability of the protocol, not so much the currency itself. That's just one side of the argument. But it's not regulated. It doesn't have circuit breakers and different things that limit the increase or decrease of the price in a given trading session. So let's say, for example, you buy NCB stock, and you notice that on Monday's trading session, the stock is running up by a certain amount. What the exchange has done is set a circuit breaker to prevent the stock from rising too much or falling too much in a given trading session. So what that does is that it stabilizes financial markets, because you don't want the investments to have limitless rises and falls, because that can cause serious panic. Cryptocurrencies don't have that. So theoretically, the price can go to zero. It's possible. They don't have circuit breakers. So I'm not saying it's going to happen. I'm just saying it's possible. And the possibility is what makes a difference. So you have to take all of these things into consideration when you're looking at cryptocurrencies.
Yeah, but Julian, isn't that interfering with the market when you actually set up and lower limits to control things? It sounds like something Mr. Siaga did with the foreign exchange way back when.
Well, okay. So there are about 3 or 4 things going on. So let me tackle the main thing. In terms of controlling it, yes, it's essentially stopping raw market forces from leading the trading session. However, what you want to do is to gauge the risk and the reward. Remember that most people's pensions are marked to market, meaning that assets that are invested in pensions are heavily invested in financial markets, which are subjected to these ups and down moves. Now imagine a pensioner has their portfolio at a financial institution which is affected by a market that doesn't have a circuit breaker. And then remember that there are elements at play who have ulterior motives when they enter the trading session. They want to move the price by a certain amount. They want to move the price down by a certain amount. And I don't mean like regular trading. I mean, there are people who try to manufacture market moves through certain mechanisms. I can't speak to the details, but what I would say is that people enter financial markets with their own selfish motives. So you have to guard against these things so that pensioners and other investors who are more vulnerable do not face those risks past a certain amount. So you have to stabilize financial markets.
I get what you're saying. But you know, you get into a market and you're expected to take risks. Maybe that's why the JSE is so stable. And you know, stock exchanges like S&P, they're just up and down all over the place. I really don't know, but I'm not gonna push this too much. So we have a time constraint.
Thank you, Denzel. That's it for as it relates to the question. Ardenne, I'm handing back over to you. Thank you a lot, presenters.
Yeah, thank you very, very much Rosie, for taking on the Q&A segment. I know Simone is back. She had some connectivity issues. I wonder if you want to say a few final words, Simone, if you can, or if you wish. If not, we're going to pass back over to Denzel to wrap up to do a vote of thanks. But Simone?
I hope you can hear me. So I had to join by my iPhone because my internet service provider decided to embarrass me today. So I think I missed a large part of the discussion. I was privy to some of the questions on the chat before I lost connection. But just to note that I am available, and I'm sure Julian would have made his contact information available as well. For additional questioning, you can send me an email, you can call me. I think I provided both my cell phone, my CUG, as well as my landline at work. So we're available for additional information. There was a question that I really wanted to provide some perspective on, and that's related to how you select an investment advisor, or how you know good investment advisors. You need an advisor that is able to break down the investment terminologies to you. So they should be able to come down to your level, and they should be able to explain the investment process as well as the individual investment assets that they are asking you to participate in. How you know a bad advisor is when there's a crisis, right? You can't get them on the phone. So, so if in the midst of COVID, your investment advisor disappears on you, then you might want to look for another advisor. So look for someone who is able to come down to your level and explain the investment process to you and help you select the most appropriate investment for your risk profile.
Well, thank you very, very much, Simone, for that. Sorry we missed you earlier with the connection issues, but we're glad you were here to to join us again at the end and just to summarize that with us, because it's a very key question as well too. If you can again, because given the amount of things we have in the chat, if you can just rekey or retype your contact information, that would be very helpful in the chat. So Denzel, I must say, I can say this is really time well spent. Another participant said that as well. So I'm going to pass it over to you to just give a vote of thanks and wrap it up for us.
Yes, I think we peaked at 82 people tonight, which is pretty good. And it almost seems we have to do a part 2 of this, Mr. President, because there was so much questions here that didn't get asked and answers are just not available. But hopefully those connections directly to our participants will help. Want to thank again Julian and Simone, who brought their expertise here and did so well in answering some of our questions. I want to thank as well our organizing committee, myself, Rosemary, who did the questions and added some of her financial help. She's in banking, insurance, that kind of thing. So she did provide some help there. Audley, our moderator, and our president, Jermaine Eslop, to put putting this whole thing together. So it's been a great evening. Thank you all so much for coming. And there's just one thing I'd like really ask you to do is we have a YouTube channel. It's Ardenne Alumni Association. Go on the site. This thing is being recorded. It will be put there. Go on the site, subscribe and click on that bell as to what you want to do, so that as things happen, you're aware and you're communicated what is happening. All right, Ardenne Alumni Association, our YouTube channel. This item will be there too as well. Or 2 other webinars are there and a few other videos. So just visit and subscribe. Thank you all for coming. And until then, thank you.